Intakes on Chinese markets developments. Are we seeing a bottoming of fear for Chinese equities? Short sellers of Chinese equities going to lose big in 2022? China increases short-term liquidity via reverse repos as well as further reduction in borrowing costs on 17 January 2022. What's more, China cuts loan prime rate a key rate on 20 January. This is not significant in terms of rate cut, but it's definitely symbolic and signals to the markets that China will step in if needed. Chinese markets continue to hold above key support levels that I'm monitoring, but the Chinese market didn't jump on the day when the key rate is reduced on 20 January. But it's important to note that Hang Seng Index, which was already down almost 20% on a one-year period, comes back alive on 20 January with a jump of close to 3.4%. It's important to note that China rates cuts this week comes at a time when Federal Reserve is signaling rate hikes in 2022. Not only Federal Reserve is signaling a rate hike, the other developed economies are indicating a tightening of financial conditions to combat inflation. You have to note that countries and economies fear the period of stagflation that sees both a significant inflation situation and slowing economic growth. Mr. Xi Jinping indicated during a recent conference in January that he's fully aware of the potential spillover effects from rising rates on developing economies. So, we see that there's a compression of yield spread between US and China's 10-year bond to less than 1%. This is a very significant event, at least to me. It's important to note that China will not want its property market to be overheated, and Chinese property developers are likely given a free hand to do what they want as compared to the early 2000s. So something to be clear, I will not buy Chinese property developers despite the rate reduction. Why? There's still a lot of good Chinese tech equities that I can acquire. I prefer Tiger Brokers, though viewers should note that there's still a regulatory overhang. Currently, China as of 20 January 2022 still does not allow its citizens to invest overseas directly. By holding the view that for renminbi internationalization, China should consider allowing its citizens to invest overseas by 2022. Overseas investment will also help China partly for portfolio diversification for its citizens as well. Also, capital from Chinese citizens can also support its own Chinese tech stock listed overseas. Only time will tell if I will be right. China announced that they will continue to cut tax to stabilize growth, which is the main focus repeatedly mentioned by China's senior officials. Such tax cut will encompass many areas including venture cap, agriculture trade, medical devices company, which are COVID specific, etc. Mr. Xi also mentioned that China will continue to embrace economic globalization and have asked countries to discard Cold War mentality. Very important, because I have always been mentioning throughout all my videos that right now we also have to consider the better of the two systems, US and China, and how it may impact on Chinese equities pricing. Mr. Xi highlighted that the common prosperity that they want is making the pie bigger, then divide it properly through reasonable institutional arrangement. It's not like taking existing pie and make it even smaller. As for CSRC, they have on 17 January continued to share that they want to continue to support corporates to list overseas, and they will facilitate the collaboration between US and China with regard to the audit work that China has been calling for. CSRC further shared that China will continue to open out its financial markets, that is, 双向开放, that is allowing capital to go in and out. Naysayers and bears will not give up short-selling Chinese tech stocks so easily. Why? It's because even when it was August 2021, the short sellers already made almost 8 billion USD. Given that there's another 4 to 5 months of fall in Chinese tech by early January 2022, can you imagine how lucrative this short selling trade has been? And see this news on 19 January 2022. So if you don't understand Chinese, let me translate it for you. Basically what they mean is to do rate cut and liquidity injection into the system. It's not consistent with the deleverage plan that China has. Now that developed economies are deleveraging, China can come from a position of strength and stability to inject liquidity into its own system, which is why they are doing rate cuts as well as reducing reserve ratio. And in the battle of the system, US announced that it is undertaking a national security risk assessment of Alibaba Cloud Unit. Coincidence? No, I don't think so. We should know that China is never going to give up on its digital and tech. Areas that China will focus on covers the big tech and the 6G. I expect the move will carry on beyond 2025. If you do recall, I did mention that there are mixed signals coming from China during my previous YouTube videos. I saw a recent update that Beijing has issued a notice requesting all government officials to be in full compliance with the Central Authorities Directive. Respective departments have to fully understand what the top leaders' guidance are. With China's 4Q 2021 GDP growth at only 4%, I expect the liquidity support and rate reduction will remain for 2022. And should US 10-year bond yield continue to go up and yield of Chinese bond coming down, the yield spread will be amongst the tightest and lowest that I've seen for a while. We should all know that this is a very important year for China's Mr. Xi Jinping. I do not expect the debt crisis in China, shared by the naysayers, to take place. It's very important to watch how the events develop in China, but I continue to hold the view that Mr. Xi Jinping will be able to lead for the third term starting 2022. Just to think through that I asked before is, if China is rushing to complete tech regulation before Chinese New Year, if yes, this will be positive. If no, then I will not be rushing to add Chinese tech stocks aggressively. If yes, that would be good given that China is already embarking on a looser monetary policy previously that I predicted, with lower interest and more liquidity in the system. The clarity or completion of tech regulation would be a very positive sign for investors' confidence. There are more signals coming out that the tech regulations are coming to an end in 2022, though there is no 100% certainty. The other risk that we all should note pertains to the point that should US equities market crash this year, will a collapse in US equities drag down Chinese tech equities listed in US and Hong Kong? For my portfolio, I have added more Chinese tech equities in larger volume on a portfolio management basis given my risk-reward profile. I continue to stay out of US tech small to mid-cap tech stocks given that the uncertainty over rate hike may impact on US tech stocks valuation and pricing. As always, this should not be construed as any investment or trading advice.